Joining us right now for a closer look at what he's seeing in the charts is Chris Verrone. He's the head of technical analysis at Strategas, which is a Baird company. Chris, you're taking a broader look. This is the time of year when people really sit back and take reflections, and you're doing the same things with the charts. When you step back, what do you see?
I think there's two or three things going on. I'd say, number one, let's totally embrace this momentum surge that we've seen over the last 6 or 7 weeks. I mean, we're talking about things you see very, very rare. Surge in new highs, percent of stocks above the 200-day has surged here as well. Those are all the makings or the conditions of a much broader advance than characterized the first 10 months of the year. So I think we certainly have to embrace that.
So this is real.
Yeah, but I think we can also ask the question, what does that mean in the short term? Because what's the immutable rule of Wall Street? As prices change, so do attitudes, right? Yeah. And I think there's a clear shift in the attitudes. As we see it in our meetings, we see it on our calls. There is a bullishness that has not been there all year. So I want to be a little bit mindful of the sentiment picture, maybe into the first month or two of the year. I think that's a tactical consideration. The longer-term setup as we end 23 is pretty good. We're seeing decent leadership. It's broadened. It's more cyclical. The market is certainly broader here. And I think the bigger question that I have into next year is, are there hints of change? Are there signs of leadership change? That's where I want to spend some time.
And is that the case? I mean, people have been talking about the small caps as maybe potentially the next leadership. You think that bleeds out?
Well, I think one of the most important changes is happening at the small cap level where value is actually exerting itself. I mean, small cap value has been outperforming small cap growth since June. I don't think many people realize the extent to which the value factor has really exhibited itself down the cap scale. The question is, that begin to translate up the cap scale? And when you look at these small cap value names, it's really a commentary on the reacceleration from banks. I think it's been an unappreciated story the last 6 months, how a lot of these financial stocks have really begun to heal themselves, particularly down the cap scale.
And what does that mean? We've talked about how this has been the year of the Magnificent Seven, how those 7 stocks are great. Does the rest of the market catch up, not just small cap? Are you talking about the other 493 names in the S&P 500?
Well, there's, I think, certainly evidence of that the last 5-6 weeks. Does that persist into 24? Our suspicion is it probably does. I think the biggest macro shift that might be underpinning this is we're starting to lose the dollar here, right? Strong dollar has been I think one of the big tailwinds for these very large Magnificent Seven stocks for the better part of the last year. Strong dollar flows into the U.S., supports the big names. If that's beginning to shift, I think it catalyzes this value trade into 24.
I mean, it's kind of no duh, though, right? If the entire market is moving on the idea that the Fed's going to start cutting rates, then the expectation that the dollar is going to get weaker isn't a real stretch, right?
Well, I would say let's be a little careful when we talk about dollar and rate differentials, because often growth will determine where dollars are strongest or not. And the growth picture, say, in other parts of the world certainly seems weaker. So the fact that the dollar is weakening in spite of that, I think is some pretty important signal. And it's in particular weakening against the emerging market pairs. I mean, look at the change you've begun to see in even CNH. Look at the commodity influenced pairs like Aussie dollar that have turned. What type of stocks do you want to own when Aussie's going up? Do you want to own stuff like Freeport and Southern Copper and metals? And that's
commodities plays, yeah.
And that's been one of the most impressive parts of this advance the last 5 or 6 weeks, how we've woken up BHP and Rio. That's a really exciting part of the tape to us.
Chris, you said something really interesting at the top, just this idea that we rarely see a setup like we have, where you see this momentum move in the market, the number of names that are trading higher. What does that compare to, and what's the next level? What's the next phase?
I think the irony is it's actually what we would have expected to see this time last year, right? Yeah. That was what was so unusual about coming off the 2022 low. The first 8, 9, 10 months looked nothing like the typical bull market. It wasn't broad. It was narrow. It's only in the last 5 or 6 weeks that game has really shifted. What do we know about momentum empirically? We know it can be mean reverting in the short term, but it tends to be very powerful over the longer term. So you can get these modest corrections, like 4,600 on S&P would not surprise me in terms of a correction level over the next 6-8 weeks. But when you get these momentum surges, the longer-term picture tends to be in pretty good shape.
Do you tell Trent any of this?
Oh, we talk about it every day.
You got a China wall? Does he just say, I disagree with you? You don't know what you're talking about? How did he get it? How do you get it so? Yeah, that's a nice way of saying it. How do you get it so wrong with getting all the input from you?
You know, I think when we look at the course of the year, and I was as guilty of this as anybody, the first 8, 9, 10 months of the year looked very different than the last 6 weeks.
Oh, so you're saying that you didn't believe the move off the October 22 lows.
I thought it was one of the most unique moves we've seen.
What does that mean? Now you're just, that's gobbledygook. So you were bearish.
I wasn't wrong. And I think the last 5 or 6 weeks, as you've begun to see this really broaden out, and what's the first rule of this business? Don't fight the tape. And you have to respect that signal. I think the bigger question as we look to 24, at what level, say, 10-year yields? Is this no longer about an easing of financial conditions? Is it about, well, wait a second, actually something might be wrong with the economy? I will trust the market's intuition over my own in attempting to answer that. So look at cyclical relationships to gauge when the market begins to get uncomfortable about the state of the economy, consumer discretionary versus staples, or transport versus utilities. There's still, to date, no life coming from these defensive groups. That's been a feature of this market all year. Nothing from utilities, nothing from staples. The one spot you're beginning to see a turn here, and keep this in mind for next year, is REITs. REITs have really started to improve, and it's a difficult place for people to get because there's so much emotional overhang of commercial real estate and all the like. Yeah. These charts have really started to get better.
Okay.
So you obviously will learn, we all will, throughout your entire career. So in saying that it was a unique rally, it wasn't conforming to your viewpoint of how the stock market should act if it's actually in a bull phase.
Exactly.
And now you're saying, and in hindsight, you're saying we're going to start listening to what the market's telling us it's doing instead of us telling us what the market should be doing in terms of whether we believe the rally.
Yeah, and I think it's a reminder that above all, what's the most important thing is the trend. And the trend was largely up all year.
It was, yeah.
What was unusual was, as you know, Joe, just how remarkably narrow it was for 10 months. And
well, it was like 7 stocks.
Yeah, it was 7 stocks. Let's say it was 30, 40, 50 stocks. It wasn't the type of move you're accustomed to seeing off a low. I think that's changed here in the last 5 or 6 weeks, and we ought to give that the respect.
But you could